Now, they say everything is bigger in Texas. And for the nation's largest banks, that is proving true. Wells Fargo unveiling a massive new campus today in Irving, Texas. This is right outside of Dallas. It's the latest sign that Wall Street is betting big on the Lone Star State. And that is where we find our Leslie Picker. She is live with a special guest, Wells Fargo Chairman and CEO Charlie Scharf. Leslie, take it away.
Hey, Morgan, thank you. And thank you, Charlie, for inviting us here to the opening of your campus in Irving, right outside of Dallas. It's one of a few Wall Street firms that have made big footprints in the state of Texas. What's the attraction for being here, and why is it important for Wells to have such a big presence in the state?
Well, first of all, thank you for coming. It is incredibly exciting for us to open this new wonderful facility that's going to hold almost 5,000 people. First of all, we have large populations of people all across the country. We're not concentrated in any one place. And when we think about where we want to expand and where we want to commit, we want to go to places that are business friendly, that are interested in helping us develop the kind of people and resources that we're going to need over a period of time. And that's exactly what we found here in Texas, and specifically in this area. The governor has been extremely accessible. The mayor is accessible. People love living here. There's great talent. There's great education. And so, add all those things up and you say, we'd prefer to be bigger here rather than smaller.
As you think about streamlining the footprint, which I know has been a goal of yours, is this in any way a reflection of the difficulty of doing business on the coast and it being easier here in terms of taxes and regulations and so forth, or is it just...
Listen, I'd say it slightly differently. The coasts are extremely important for a lot of reasons, both in terms of just the size of the economies and the talent. But, I grew up in the New York area, and in 2000, I moved to Chicago for the first time. And I learned very, very quickly that the coasts are not what this country is all about. There's a lot more to this country, and the only way that you really have an understanding of what this country is, what it can be, who lives here, who can add value to us, what our client base looks like, it's helpful to be places other than the coasts. And so we want to have large locations in places other than the East and the West Coast, and this is a great example of it.
And speaking of efficiency, at earnings last week, you all updated your return on tangible common equity targets, your ROTCE targets, 17 to 18% over the medium term, which is more than double what it was back in the fourth quarter of 2020. How should we think about your efficiency goals as it pertains to the use of technology or the reduction of headcount in terms of talent and workforce?
Yeah. Listen, I think the way to think about it is efficiency it's two things. Efficiency is doing more with the same amount of resources. So, for instance, in our technology group, the way we're using AI, many of our developers are seeing 35% more productivity. We don't have less developers than we used to have, but we're getting more accomplished because there's so much more we want to do. In other places, we might wind up being able to do with less people in a certain area. But I always point out that if you look over time, huge amount of technological advancements over the last 20, 30, 40 years. And our company is a lot bigger today than it was. We employ more people because we figure out where we need more talent to be able to serve more of this country. And that's what we're going to do as we think about what we can get out of AI.
You think that will be kind of the future for Wells Fargo?
I think it's definitely the future. I think that what I worry about is that it's not linear. I worry about that it's going to take a concerted effort on not just Wells Fargo, but all companies to think about how will jobs change, what will we need more of, what will we need less of, and how do we figure out how to make that transition? Because, people who work at this company care, and so we're focused on trying to develop a plan for what that means, figure out how we retrain people. People retire, people leave the company. That's attrition. So use attrition as our friend to take people whose jobs might be changing and slot them into other jobs where they're going to continue. So as we work through this AI transition, to do it in a way which is really, really beneficial, not just for the company and our shareholders, but for the people that work here.
And Wells Fargo is going through a really interesting moment as well, having that asset cap lifted. Yeah. You recently told Fortune that restricted deposits and securities to $1.95 trillion. That caused the firm to forego an estimated $600 billion. And I'm just curious how quickly you think you'll be able to win that business back. Is that the goal?
Well, the goal is to win that back and a whole lot more. Again, we were restricted for a long period of time. When we think about the asset cap means that you're limited on how much you can lend. It's limited on how much you can take in deposits because deposits come with cash. We're limited on the amount of securities financing we can do and securities inventories to facilitate customer order flow. So even though we found pockets to grow the company, which haven't relied on balance sheet, now all of our businesses to compete on a much more level playing field. And we've got significant aspirations on where we want to go from here because we can compete on an equal playing field. But the real key is we think that the value of the franchise that we have, the scale, the breadth, the depth of what we have, the quality of the people, the brand, we think it's, we're going to be a really formidable competitor in all the businesses in which we still operate. And as I said, high aspirations, 17 to 18% ROTC is a new target for us. We've also been clear that that's not the end game. That's not best in class. And our goal is to be best in class, but to achieve best-in-class returns while we're investing significantly. Because you can underinvest, have strong returns for a period of time, but you're just hurting the future. We want to have best-in-class returns while we're investing for the future, so we've got the ability to continue on the trajectory that we think we can be on.